The world turns, and with each turn, a change. And each change makes it more complex, unpredictable, enigmatic. The world keeps turning. And from the Pellicer and Heredia practice, we anticipate everything that is going to happen. Brexit, artificial intelligence, new commercial borders, legal tech. The world keeps turning, and it commands the reliance on international lawyers who are capable of interpreting this new reality with integrity, honesty, and transparency, offering answers to so many new questions. Whatever it is, ask us. At Pellicer and Heredia, we know how.
Hello, good afternoon. Today is the 17th of May at 5 o'clock. And today we have a special webinar as we are right now in the time of making taxes. I would like to remember one phrase that was said by Benjamin Franklin that says, nothing is certain except taxes and death. And we will be speaking about taxes, about income tax in Spain, about wealth tax in Spain, about inheritance tax in Spain, or different regions in Spain. Well, for the worldwide incomes once you become resident, but also when you are non-residents, what about the non-resident obligations that you may have in Spain, on wealth tax or maybe on income tax when you own a property. For this reason, we have a special guest, special experts, I would say, on international law and international taxes. About they have expertise in many years. We've been doing many webinars and helping people on understanding their own situation and helping them in order to have a most tax efficiency on their own situation and this scenario. And I would like to present Ignacio Pellicer. Hello, Ignacio. Good afternoon.
Good afternoon, Pedro. Thank you for organizing the whole webinar.
Thank you, Ignacio. We will be speaking, obviously, and you will be presenting some general scenario about income tax and wealth tax. But also we have Michael Davies from Andalusia. He is based in Marbella, Malaga, Almeria. Hello, Michael. Michael, we cannot listen to you. Hello, Michael, we cannot listen to you. Michael?
The microphone is off.
I cannot listen to you, Michael.
Okay, I should know by now. Nice to see you guys. You're both looking very brown, so you must be going to the beach already.
Well, I mean, it's very sunny today, but obviously we have the time working. And well, Michael and Ignacio, well, let's just start with obviously about taxes. I mean, we are right now on timing of income tax, obviously the non-resident taxes for the year, but also about wealth tax, about the different regions that we are based in. Ignacio is in Comunidad Valenciana. Michael is in region of Andalusia with some special also benefits. And Ignacio, I would like to start about, let's start about income tax, but let's start about the grounds of being resident or non-being resident in Spain, and then let's focus on the starting point about income tax, and let's go through, let's say, wealth tax, inheritance tax, and non-resident tax with you and Michael.
Okay, well, thank you very much, Pedro, for the presentation. I will try to make it as simple as possible because I know speaking about taxes is not, I know it's not a very nice thing to talk about, but we need to be practical and then we need to know how it works. So instead of being very specific, I'll try to be general. One of the first things anybody should know is when are you becoming fiscal resident in Spain? And this is a lot of questions we are getting from when clients wish to come over to Spain, obviously because of they've got the relocation question, which is about the immigration and the tax. Everything goes together, and the purchase of a property. All these three things are very important for those who are watching from abroad, willing to come over to Spain. In Spain, everything starts on the 1st of January from a tax point of view. So you always need to remember that to become fiscal resident, you need to be more than 183 days in a calendar year from the 1st of January to the 31st of December. So for those in 2022 who spend more than 6 months in Spain, more than 183 days, they should lodge their income tax return in Spain, even though they're entitled for all the benefits of the dual taxation treaties between different countries. Now, I'm going to start talking about the income tax return. We'll just talk briefly just about the wealth tax when it's applicable in this community, because where Michael is being based is a different rule. And then if you wish, we could spend with Michael just a few minutes as well about non-resident, because some of them might have the question on the relocation side about the non-resident tax. Now, we've got Guillermo and Marta who are sharing with us, so please feel free to send us your questions. I will try, if they could be general, even better, because everybody could benefit from the whole thing. Instead of being very specific, we could always discuss that privately in a different time. Marta, are you able to please share on screen, how does it look like a income tax return in Spain? And what that's exactly it. That's Modelo 100, and that's what we call income tax return for the tax year 2022. In general terms, we will always need you to provide your passport details, your birth details, and very important when you speak to your advisor to make sure that the tax office has your address for notification purposes. I don't know if Marta could scroll down a little bit and we could just be looking into it. Okay, now the first thing we will request when you start doing the income tax return, you will fill in a form where it says how much money have you made and the different departments or different concepts. For example, you could see here on this income tax return that this is the salary. Okay, let's say you have a salary of 100,000 euros from a job, or 141 as it states here. Now, if you scroll down, you will see down below as well, all these payments that your company has made into it. And the obviously the dividends or interest, because you will need, bear in mind, you will need to include your income. You'll need to mention how much social security you contribute into the system. You need to inform how much dividends or interest you manage to get. I'm talking from an international point of view. So I know Americans will have certain specific questions, British different ones, but we could discuss it later on with questions and answers. Then we need to know how many properties you have in Spain, and if the property that you're using is for a business, is shared with somebody, is being rented out, etc., etc. So you will, I don't know if you're able to see it properly, but you will, this is basically the Modelo or the form template that we will need to use. Okay, Marta, please carry on then. Then certain things, for example, in this case, if you are paying money into a pension fund, you will include it there as well, because you are allowed to deduct that as an expense up to a certain limit. I highly recommend you to double check with your advisor every year, because the laws change very often. For example, for those of you who are resident and they've got you've got pensions, okay? This year, if you don't reach more than 14,000 euros in a pension, all different pensions, that hasn't been taxed at source, neither in Spain, and you don't have any other income, you are not obliged to lodge your income tax return. Some people get confused with the allowances, which is based on a personal basis, depending whether you are over 65, 75, whether you've got a wife or husband, whether you've got children, whether you've got some discapacity granted by the Social Security. Then you have as well to include whether you have a civil service pension, which you will be taxed in the home country of origin, like a policeman, like a fireman, etc., etc. That information, we need to include it in the form, and you will deduct it basically. So you're not going to pay taxes here, but you're going to include that in the whole lot. So the sliding scale will be affected by this income, even though the tax on this income will not be paid in Spain, will be paid abroad. If you move on, then you have a personal minimum allowance. For example, here you could see 5,450. Then you move on, and then you will split up here. You might see how much money the community gets and the state gets, which in this case is a lot of money, as you could see here. We are talking here about without source of income, 38% in the total, but we're talking about a high income of 140,000 euros. If you move down, Marta, you will see here as well the deductions. If you're divorced and you have a settlement as well, you will deduct all these expenses included in the form. And if you have dependents as well, you have extra allowance. More things. In Spain, you will pay your tax. If you're being retained in your by the payer, you will pay on a monthly basis. And on the 30th of June, you've got the possibility to apply for a rebate in some cases, like this person here. If you go down, Marta, we can show that in this case, since he pays so much money on taxes, he's allowed, because of his personal circumstance, a rebate. And I believe he's getting 1,700 euros back. It's worth you checking your personal situation, because you are able to claim money back, okay? Marta, could you please go down, and then they could see here how is breaking. Okay, you will see here, some of you, about the money, and then we will need your bank account. Thanks for sharing, Marta. I'll move on. Important things you normally ask me, for example, Americans will ask me about the IRA and the Roth IRA. Okay, the IRA is a pension, it's treated as a pension and is income from work. And the Roth IRA as well is pretty much an investment that now Guillermo just download a recent communication from tax office that is kind of considering that like an insurance. Like in Spanish, it will be a PS, and here you will only be taxed, even though in the United States it is exempt or it doesn't pay tax. Here, it will be paid on the profit on a percentage. I know it's a complex thing. It's a very, very new resolution that it came recently. And I recommend you to speak and discuss about for those who apply in personal, because is very specific. More questions. The private pensions as well. You will include it here as well. And you should pay all this money in Spain if you're a resident here in Spain. Now, some of you would like to do tax planning, and for those of you who are relocating into Spain, you will be willing to do tax planning, as when you do the video conference with us about immigration, we discuss about the tax as well. Because I always say, if you want to do tax planning, it's always worth it. You know, we're talking about how the best way to do it properly. As a matter of fact, if you arrive in Spain from the 1st of July, for obvious reasons, if you stay in Spain, you're going to be less than 6 months. So for those who are trying to relocate into Spain, this might be a good idea for you to jump into Spain, come over here, and buy another year, becoming non-tax resident. Important for those who are selling properties abroad, I normally recommend them to do it previously, coming here, because a lot of you are telling me about the benefits that you have in your home country, and here it doesn't happen that way. Okay, with regards to wealth tax, and I will pass it over to Pedro and Michael. With regards to wealth tax, in this community, Comunidad Valenciana, at the moment, we are on the 500,000 euros limit. And then you have 300,000 euros per person on your personal home. So for those who are having around the world over 500,000, not including your habitual and your property, or your home property in Spain, you will have to do a wealth tax, which in combination with the income tax return, you will have some allowances as well. Okay, now, as I said, you look carefully at these rules every year, because what is 1 year is one thing, the next year could be exempt. For example, If we discuss it later on, like inheritance taxes, this happens exactly in that way. And with regards to wealth tax, Michael will explain how in Andalusia at the moment is exempt for specific scenarios. And in this community at the moment is taxable, okay? It's always worth, instead of getting scared about figures and things, it's always worth you discussing with your lawyer. You doing tax planning, I highly recommend you to do it beforehand your tax return. So you know specifically what is the scenario you are looking only in your case, because a lot of people are basing their knowledge on what people says, and what is important is your specific situation, your allowances, and all your benefits. Okay. Now for wealth tax, as I said, this year it is being taxed, but Pedro and myself in this region, we're hoping that this will be removed eventually. And as the inheritance tax, Michael will tell you later on all the benefits that he's enjoying over there. Okay, I try to be short so we could start with questions and answer. I'm sorry, this specific subject is not very nice, but we all need to deal with it. Over to you, Pedro.
Thank you, Ignacio. It was clear about, obviously, about the explanation you've done in general about the about the income tax, about wealth tax being resident. Obviously, there is another situation, and when someone is non-resident but bought a property in Spain or is going to buy a property in Spain, what kind of non-resident tax needs to be done? What about wealth tax as about non-resident? What about the situation, special situation in Andalusia at this time right now? There is a special benefits on wealth tax and inheritance tax. And this is why we have Michael. Michael is an expert on international law, an expert on inheritance and international taxes as well. Hello, Michael.
Hello, Pedro. Thank you for inviting me to this great webinar. It's
so, I mean, I would like you to explain a little bit about, I mean, there's a brief summary situation in Andalusia when someone becomes resident, but when someone also invests in property about being non-resident also.
Okay, so as far as non-residents and income tax for non-residents, well, it's the same all over Spain. There'll be a different for the non-residents as far as wealth tax, but non-residents is going to be the same down here in Andalusia as it is up in the Valencia region, and as I say, and anywhere else in Spain. So for non-residents, the situation, if you buy a property in Spain, one property, two properties, it doesn't matter, as an investment, sort of the things that you've got to take care of are have some Spanish wills, then make sure that you set up a direct debit, electricity, water, rates, rubbish, and community of owners. And then once a year, if you don't rent out the properties, you're going to have to file a non-resident hypothetical income tax return. Some people call it 210 forms. Some people call it hypothetical income tax. And basically all it is that 1 year in arrears. In other words, at the moment, 2023, we've got until the end of the year to present the one for last year. What we do is the government basically takes the cadastral value of the property that appears on the rates bill. So when you purchase the property and your lawyer went through your annual expenses, one of them is the rates. Well, when you have the rates bill in the hand, on it, there's a figure that says cadastral value, which is normally about half the market value or a little more than that. So basically, the non-resident tax return is simply that they consider that your hypothetical income is 1.1% of that amount. Exceptionally, it can be 2% if it hasn't been revised for many years and some exceptional cases, but normally it's 1.1% of a cadastral value. And then what they do is tax you at 24.75% of that amount. To cut a long story short, if somebody has sort of a 300,000 property in Spain, their non-resident tax return every year will maybe be anywhere between 300 and 800 euro, and they'll probably have to pay somebody to make the returns for them. If it's in joint names, will probably end up costing them another 300 euro or around that figure. That's the non-resident tax return. That's if you don't rent it out. If you do rent it out, then things get a bit more complicated. And then there's a difference between non-residents of EU countries and non-residents that are resident in EU countries. So basically, if you rent out the property, at the end of every 3 months, you've got to declare the real income on the rentals. And if you are If you are a non-resident that's resident in an EU country, then what you'll do is you'll deduct all the expenses necessary to create that income, and then you're going to be taxed at 19%. If, on the other hand, you're non-resident of Spain and resident in a non-EU country, for example, the British after Brexit, they unfortunately can no longer deduct the expenses on the rentals. They're going to literally, and their rate of tax is going to be higher. It's 24% instead of 19%. So they're literally going to pay 24% on the gross income. So they'll be declaring that at the end of every 3 months. And when the year is ended and we go into the next year, that tax that we mentioned before, the hypothetical income tax return, what you do is whoever does the presentation, he will ask you, how many days did you rent out the property during last year, on which you've already paid the tax, and then he will make the calculation of the imputed income tax proportionally to the days that you have not rented it out. So that's sort of it in a nutshell as far as income tax. For wealth tax, it depends on what region of Spain you're in. In Andalusia, we no longer have wealth tax as such. There is this new tax that's just being created, but only for people that have got above 3 million euro. When we're working out wealth tax, if you're resident, we're talking about worldwide assets, but you have more deductions for main home, etc. While if you're a non-resident, it's only the assets that are situated in Spain. It's very important, I think, when people buy the property, because we've got 17 regions. Each one's got their own different system for transfer tax, wealth tax, inheritance tax. So people go online and they get very confused about what the different taxes are because they're reading websites. They're buying in Marbella and they're looking at a website from a lawyer up in Madrid, and they're thinking, well, all the lawyers are saying they're crazy. They each give me a different view on things. That's because we've got 17 regions with systems that are quite different. And also, for example, inheritance tax, they worked out the other day that of the 17 regions where each one of them has got their own inheritance tax levels, on average, during the last 10 years, the regions have changed their inheritance tax levels 2 times over the last 10 years, each one. So I think, it's important that when you buy the property, either with the lawyer that's doing the conveyancing for you, or if he's not knowledgeable about some of these things, just to book a consultation with somebody that knows about. I mean, there are sort of things that you need to talk about are basically immigration rules, about visas, etc. The actual conveyance itself, that's another thing. Inheritance tax is definitely an issue that we recommend you talk to consult with someone before you make the purchase. And then your annual tax returns, income tax, non-resident tax. Those are the things I think you should consult. Maybe you could do it all in one place at the beginning. I know, for example, that you guys have gone off a big law firm that deals with all these matters. So if you're buying in the Valencia region, you can do it all in-house. In our case, we're more of a smaller firm, but we're very specialized. So we know everything. We think we know everything about inheritance tax and inheritance. Obviously, yeah, nobody knows everything, but that's where our expertise lies.
Okay, well, Michael, thank you very much. I mean, it's been fantastic. You and Ignacio has explained about income tax, wealth tax in different regions, obviously, but non-resident situation, which is extremely important also. And well, let's start with answering.
Pedro, before you even go, Michael touched a base here, very important, about the renting out property.
Yeah.
And I think I missed that one. Just for people to know, they will need to include it as well. A lot of people are thinking about moving to Spain and living from income from the property they rented out. Well, the regime in Spain for renting out a property is very, very good, because you will only be taxed on the 40% of the net, which means income minus all the expenses of renting your long-term property or long-term rental. Yeah. Then out of the 40% of the net is the figure that is going to be taxable, and you will deduct whatever tax you paid abroad. Clients are very surprised about this, and sometimes you think, well, shall I sell my property abroad or not? And then if you haven't done it before moving to Spain, I am not a friend of selling, especially because of capital gain tax, Pedro, because Michael, because 19, 21, 23, 26, and I think now 28. So at the end of the day, is money lost in a way. And however, if you get it like an income, like a pension, I would say like a Roth IRA or like something like that, you've got 60% is not taxed and 40% is taxable of the net, which is not bad, is it?
Yeah, but what if,
Very good.
obviously I agree with that. I mean, in case that someone, okay, it is better not to sell it sometimes, but what if you need to sell and buy a property in Spain? What if that property in abroad where you live?
Pedro, then I'm going to just put the link here and the sliding scale, the 19, 21, 23, 26. But when they just come with that figure and they didn't know, they are shocked because, oh my goodness, this is not taxed in the UK, which this is a lot of things that, it hasn't been taxed, and it's worth you discussing all that. Yeah, Michael.
Yeah, Ignacio, I just wanted to point out because you mentioned something before, and you mentioned it just on passing, but I know that that piece of advice can save people a lot of money because we've heard a lot of horror stories. And that, as you mentioned, that when people decide to become residents in Spain, sometime that you advise that if they're going to sell a property in the UK or in their home country, to sell it before they move to Spain. Now, you said that on passing, and I know exactly why you've said that, but some people won't realize how important it is. So I sort of point it out. Now, this is all about capital gains tax. Now, when you become a resident in Spain, remember you're liable for capital gains tax on things worldwide. So sometimes you may have an allowance in the UK when you sell the property or in whatever country you are, because we've got clients from all over the world and each one's got their own different systems. So you may, in that home country, you may have an exemption when you sell the property because of capital gains tax, for capital gains tax, etc. Now, remember though, if you've already become a resident in Spain, you will be subject to declaring that sale and that profit in Spain, and Spain may want to tax you. So what you said is, I've seen this mistake made, and it's one of those really silly mistakes that ends up costing people a lot of money. And it happens not just with the sale of properties, but also in the sale of companies. People that move over to Marbella and they come to see us with inheritance planning. And then one day we hear this horror story they've just been through because they sold their company back in London and they thought it was free of capital gains tax in the UK, and suddenly they got the problem over in Spain because all they had to do in reality was not become residents in Spain.
Correct.
Before selling the assets over in their home countries, and it completely reduces the possibility of Spain claiming any capital gains tax on those assets. And sometimes we see people make this mistake by like 4 months or 3 months or just 2 months, and you think, wow, it's just so crazy. But
fully agree, Michael. Yeah.
You said that, and I've seen it. I've seen the horror stories. So people, that's why people really need to consult before making these moves, and before making the move to Spain. It's good to book a consultation with them.
And actually, Michael, we get a lot of when we start the relocation, because when they do the video conference, they start talking probably about visas, and then you carry on talking, and then it's a very thin line there about taxes, because when are you going to start becoming resident or applying for your visa, and then probably they didn't think about the tax, or buying a property, Michael, in one name or in two names, and then you jeopardize the golden visa. That's something as well.
Yeah, absolutely. It happens all the time. Yep, it happens. Yeah.
So it's good. Pedro, over to you.
Okay, let's focus right now. We have plenty of questions, a lot of questions. Let's try to answer as much as we can. I know it's going to be very difficult. Thank you, everyone, for making the effort to write these questions. We will try to answer them specifically if we could. And in some of them is general, but we'll try to answer. And if something is left because we didn't have enough time to answer, please send us an email, and we'll put our emails, Ignacio and Michael, and we'll try to answer them, or have a video conference, a chat with you in order to answer your situation. Okay, Ignacio, let's start with them. I will not be saying any surname, just the name, just to keep the confidence. And it says, Hola, I was granted residency on the back of a WA, with, I assume is a withdrawal agreement, and received a TIE card dated in November 2021. Currently, it stays 3-5 months annually and do not exceed 183 days. And in the previous years, 21, 22, and 23, he's been paying non-resident tax because I assume he owns a property in Spain, and he's been advised to continue to do that. Domicile residency in the UK, owns a house, is a director of 3 companies, and then is amended, and earns a salary paying in the UK tax annually. Well, perfect.
That's very good. Yeah.
Is it okay?
Yep. I consider he's doing perfect because he's being, he doesn't exceed the 183 days, Pedro. So therefore, it's a way to control taxation in a different country. So this is a confusion. Sometimes people mix, and I could understand, mix the immigration with the tax, and it's not the same, but it's linked. You know, it's linked. You've got a TIE under the withdrawal agreement, but doesn't mean that you are a tax resident. And this is good, Dennis, you're doing correctly. I believe the taxation here is correct. As a non-resident, you were saying less than 183 days. I don't know if Michael wanted to say something.
Sorry, no, I was just seeing one of these questions. Some of the questions are quite interesting when we start going through the questions.
Let's move on.
If there's someone interested in Michael, just go ahead and read it and let's answer it.
Yeah, well, this is one, because I've seen this, we've had this in the office. People in Andalusia getting very confused with the wealth tax, the fact that it doesn't exist now in Andalusia, and this new solidarity tax that has been brought out by the central government that affects basically all regions. But in those where there is wealth tax, you can deduct that amount. So it's confusing for people because it's a crazy sort of system they've come up with. So this client here is asking something that we've seen in the office quite often. That is, says, I'm a Spanish tax resident and live in Andalusia. I would qualify for the wealth tax, but not the new Impuesto Solidario de Grandes Fortunas. Do I just ignore the wealth tax, or do I need to file something that says I'd be subject to this, but I live in Andalusia? Okay, so the answer is yes, you just ignore the wealth tax, because there are 2 different taxes. The wealth tax, so in Andalusia, we don't have wealth tax. The new solidarity tax is if you have assets above 3 million euro. So this friend here is saying that he doesn't have the assets above 3 million euro. So he's got nothing to declare because there's no wealth tax declaration. And in his case, he's not subject to the solidarity tax. So he doesn't have to make any kind of declaration. People are getting very confused with this, with all this, the wealth tax and the solidarity tax. So basically for those that are subject to solidarity tax, in other words, that you've got assets above 3 million euro. 3 million.
Isn't it,
euro.
Michael? Isn't it 3.5 million? I thought it was
3.5. It could be 3.5. Could be 3.5. It's 3.5 million. If you have more than the 3.5 million, and remember, if your residence is on worldwide assets, if you're subject to it and you live in Andalusia, then you simply pay the solidarity tax to the fund. If you're in somewhere like Valencia region where there is wealth tax, you present your solidarity tax, but then you deduct what you've paid in wealth tax. So I mean, really, I think people, if you're in one of the situations where you have to pay solidarity tax and you have questions, you need to book a consultation with someone and just go through your specific situation, because otherwise it is quite easy to get it wrong.
Okay, let's follow questions. Let's go rapid. I mean, from Carmen, thank you, Carmen. It says, do US IRA retirement accounts get included in the wealth tax? The answer, Carmen, is yes. There are, I would say, 2 important resolutions that we've been checking, obviously, and we're updated on that. And obviously, all of them is a binding resolution, and a binding resolution by tax office. And in the past, it was a gray area on that, but now, obviously, we have this from I would say, some couple of years. Even
though Pedro, I disagree, because in Europe, this is just
obviously
a
I
pension.
disagree also, but
Yeah, it's a pension. If they were in Europe, these pensions wouldn't be part of the wealth because it's considered like a convalidated pension. But in the United States, still, there is not that similarity, is it?
Probably this will change we should file and probably get because it will change in the future whenever it's going to be someone getting some judge resolutions in the future. I mean, probably we should file these, because obviously this is something that it's really damaging, really, the situation about the Americans that are living in Spain with the US IRA. Okay, well, let's go ahead with from Debbie. Thank you, Debbie, for making this question. It says, we have sold our house in Canada. Closing date, it was in June 2022, sorry, and have purchased a house in Nerja, in Andalusia, taking possession July 7th. We are applying for a new lucrative visa and expected to be in Spain full-time by the end of September. I presume this year, maybe it was last year, but I presume it's this year, sorry. So if we were to rent out our home in Spain over the summer, would become tax resident this year. We want to make sure that we are not going to be affected by capital gains tax on the sale of our house. Well, this is something that both of you have spoken about, residency, no residency. What would you answer, Ignacio? I think obviously this year, 2023, it looks like obviously it's going to be less than 180 days, so it's not going to be resident.
Yeah, because I didn't see, Pedro, how much time they're spending in year 2022. I think
this year, the year they sell the property is going to be less than 180 days, gets a non-lucrative visa in November, so it's quite clear that it's
you're right.
Then owns a property in July in Nerja, in Andalusia, so non-resident tax, as Michael has explained, non-resident tax will have to be filled in this year.
Yeah, I think what Michael insisted in explaining is quite important. If before you are a resident or fiscal resident in Spain, or before you becoming more than 6 months, if you sold it before, it's not taxable in Spain. So whatever, for example, for the British, the withdrawals from pensions, I hear that is 25% exempt and is not here in Spain. So if you're planning to cash your pension before becoming fiscal resident in Spain, please do it before. It's too late, because sometimes here you will find a surprise exactly as selling your property. Yeah, Michael.
Yeah, I was going to say that in cases like this, it's very important to make sure that you do present your non-resident hypothetical income tax return, because it serves the double purpose of, one, avoiding fines for not presenting it, etc. That's not the most important thing. It also serves as a manifestation from you to the taxman, a confirmation that you are indeed a non-resident. Because if they cross-reference the ownership of properties with the presentation of tax forms, if they don't see the non-resident tax returns, they may use that as an indication that you were a resident. So it's important that if you've got a property and you are a non-resident, to always reaffirm your non-residency status by presenting your your imputed income tax correctly. So in this case, they definitely need to make sure that they present their imputed income tax. They purchased in July of 2022. They should basically, I'd say, as soon as possible, do your imputed income tax return for the days of ownership of the property last year, just to confirm to the system that you're non-residents.
Thank you, Michael. Well, to summarize, I mean, Debbie, you are not going to be affected by capital gains, but obviously you will have to make about income as non-resident tax, as Michael has said. Okay, let's go ahead by following question. Matthew, thank you, Matthew, for writing this question. Says I'm American, non-lucrative visa, 5 people total living in Valencia, 3 kids, 3, 5, and 7. You've got a business in America, 3 businesses in America, and you do your federal tax in the US, and you have to declare some amount from US or different amount. What is the tax rate I might have to pay? Ignacio, we have had many clients from the United States. Now, at the end, the timing of declaring here and in Spain, we normally advise and to firstly to do it in Spain and then do it in the US and deduct wherever it's been paid. Is that right, Ignacio?
Yeah, actually, I keep reading the question, Pedro. I think he's got 3 businesses, but I don't know how much he's in. So I presume it will be more than 14,000 euros from abroad, and therefore he will be obliged to do his income tax return in Spain, and he's entitled to deduct, according to the dual taxation treaty between Spain and the US, whatever is being paid in the US. Sometimes it's worth doing planning here. If you could defer payments of the tax for United States and make the Spanish one first, and then second, the American. Why? I mean, we normally, I tell you how we work. We ask a draft from your accountants in the States, so we understand what you will be declaring. And then from there, we start working on the figures. and what, according to the dual taxation treaty, you should include it in Spain and should deduct it. And then after you lodge it here, we give you this copy, obviously, the presentation copy. So you give it to the accountant in the US, and then you will pay whatever extra tax you'll need to pay over there. But this is the ideal scenario here. But I'm not sure in the question, Pedro, whether, so we really recommend him to do a specific and video conference or know more about it, okay?
Okay, thank you, Ignacio. Let's go. Let's try to be a little bit more rapid. And on Philip, thank you, Philip. He's saying, I'm resident in Spain, now retired in Spain, work for the US government and have a US government pension, which I understand is not taxable in Spain under the bilateral treaty. What about America's government's standard pension for retirees, what we call Social Security in the US? It says, my understanding is that this pension is taxable in Spain, correct?
Sorry, Pedro, I lost you, so I couldn't follow up the question. I don't know if you could answer because it broke.
Okay, well, I will be able to answer that. I mean, in those cases, the Social Security, according to the American and Spain double taxation treaty, in order to avoid that, could be taxed in the US and could be taxed in Spain. As it's been taxed in the US, obviously in Spain we included, but we deduct, and as a reduction on the base, in order not to be able to be taxed. So in some ways, could be done in both countries, but once we declare it in Spain, as we have to do, then will be deduct whatever you have done in the US according to Social Security. Okay.
Pedro, I'm going to share with you guys.
It is correct that Philip says the government pension will not be taxed in Spain. It's exempt, really.
Pedro, I'm going to share with you guys the sliding scale that we wrote down the article about the income tax return. If you click here in the chat, you'll find out the link, and later on you could see some people asking about the sliding scale for capital gain tax and for la renta. I mean, it's a summary, but it could give you a little bit of idea for you to work it out. Because some people are saying, is there any way we could work out the income tax return? Well, this is the most I could give you now. Okay.
Okay. Let's follow another question. Let me see what I lost here. Okay. From Peter, I believe pension annuities are taxed differently in Spain to the UK. What is the difference about annuities, Ignacio, and from UK?
What are the difference with annuities? Annuities in Spain, they're treated like a pension. So I think in the UK, the annuities are treated as a pension as well. So I don't think there is any difference.
Okay, let's go to, it says from Steve. Thank you, Steve. This is both a non-lucrative visa question and a tax question. You earn a non-lucrative visa and earn anything by doing remote work in your own country. How do you claim the income from the Spanish taxes? Non-lucrative visa, non-working visa, which obviously is something that, as we know, has been right now approved recently. Ignacio, I don't know if you would like to go ahead about the nomad visa and the special treatment that we have on taxes, but we could speak about that also. Non-lucrative visa, we now obviously judges the resolutions allow in some ways in order to work remotely.
Yeah. Pedro, just a brief. So I wouldn't. I mean, everybody. I know we're short of time all the time. There is a lot of information we publish in the blog and in the website. So for those who might be having still questions, just please log in because we just put a lot of information and content for you. With regards to nomad visa, for those who are thinking about relocation, and I really think you are in the most important stage of doing things properly. If you go for the nomad visa, you will be able to apply, depending on the case that you're dealing with, depending on the type of work. If you're working for a company, for example, that allows you to work remotely, then you're going to be allowed to pay. For example, this guy that was being charged 104, he was getting a pension or income of 140,000 euros. these person will be much better off with a NOMA visa because it will be 24% flat fee. And from the top of my head, I think it's up to 675,000 euros salary. You will only pay 24%. So it will not be a sliding scale, Pedro. So for those who are thinking about the possibility of getting the NOMA visa for him or her and the family, and it's really worth to tie in the two things together, going for the visa and making sure you register the social security so you're able to apply for the 24% specific, which it was in the old days, the Beckham law, Pedro.
Okay, thank you, Ignacio. I think it's clear. Let's go for following one from Nata. Thank you, Nata. Hi, I entered the Agencia Tributaria. I suppose in the website, and the message that I get, the message is no obligado, which is like information that the tax office informs you regarding when you don't have obligation to make the declaration. So I'm living in Spain. I'm registered in Torrevieja, which is near Alicante. I can't even edit the Modelo 100. What does it mean? What should I do? It says no obligado. Okay, well,
right.
With the information that you're given, it doesn't mean that the information that they have or the information that you may bring is correct. Maybe you have to check if it is being done correct or not. But if it says no obligado, is that you don't have obligation to present it.
What I recommend this lady, Pedro, is to print out that screenshot that says no obligado, and making sure that she has enough evidence, because it's really worth it. As long as you did comply with the correct information and putting that in the gaps, and it says you're not subject to pay taxes, then that's fine. You don't need to do Modelo 100. If you are interested by any reason to apply for a fiscal certificate through the tax office, you could always do it, okay, with your digital certificate or through your advisor. But the answer is you don't have to do the 100 as long as you did comply with the details, the necessary details in the gaps, and it says no obligado. But make sure. I'm going to share with you guys as well the dual taxation treaty here of the UK and Spain, the American, the US and Spain, and capital gain taxes for your lecture. Okay. Okay. A question for Mike, and this is for non-resident. It says from Alan. Thank you, Alan. Can you tell me when the annual non-resident tax return has to be filled and paid?
Okay, so it's we get asked that question a lot. It's simply it's 1 year in arrears, but we've got the whole of the year to present the last year's tax. People get confused because most accountants that file these returns, or lawyers, or for example, they sort of do it at a specific time of the year, but the obligation is right until the end of the year to present. So right now, for example, we've got all the way until the 31st of December of 2023 to present the non-resident tax return for last year. So speak to your accountant or whoever's going to do the return for you and ask him when he normally presents the returns for his clients. Okay.
Thank you. Let's go ahead. If you see Michael or Ignacio, any question that you would like to answer?
Oh, well, the next one, well, maybe I missed this. If I live in Andalusia, do I need to declare the wealth tax? No.
Okay, perfect. Okay, and then we have Jose. I'm a Cuban American. Last year I became a Spanish national. I'm planning to go live in Valencia this year. I will buy a property. I'm retired and cannot read it very well. And my incomes have come from a pension from Florida retirement system, working in the US, and gross income. No. It doesn't make any question. Well, it's a situation, obviously, as whenever you become resident, you will have to declare your worldwide income in Spain according to the Double Taxation Treaty. And in most of the situation, you will have to declare and pay taxes in Spain. And well, let's go to, I cannot read. Okay, from Philip. My wife and I are both residents. For the wealth tax, we fill separate forms. Can we simply add up our worldwide wealth and divide it equally on our forms, 50% each? Or must we go strictly by whose name the assets are in? For example, if an investment account is in my name only. I don't know enough. You are able to, you understand the question? I mean, obviously-
Pedro, I lost the question. We have hundreds, and I just don't know where we are.
Pedro, I'll answer that one. You have to declare it correctly. In other words, if an asset is just in the name of the spouse, you can't simply just divide it by 2 and assign half
that's
each.
right.
So it has to be based on the real situation of and whose names those investments are.
Okay, and as a resident, are there any issues with holding property outside of Spain without selling it? This is from Peter. Thank you, Peter. This is for both of you, Michael or Ignacio.
Yeah. No, there's no problem at all. If it produces income, you're gonna have to declare it in Spain, obviously. If it's worth more than 50,000 euro, you'll need to declare it on your 720 form as well as wealth abroad. But there's no problem.
Okay. Thank you, Michael. Let's go.
Pedro, if you tell me the timing, I could.
That's the easy thing, yeah. The time.
Yeah, because I'm getting the
time of the message.
The time of the message, and I could follow because there are big questions here.
Yeah, there are a lot of questions. I mean, I'm just trying to read about.
If you want to summarize, Pedro, I managed to just share with the audience here a lot of articles just to try to get the message through, if it helps. Okay.
Okay.
Do you know where we are now? In what number?
Let's read this question about David. Thank you, David. About on other question, I will receive rent from our house in the US. I mean, someone which is living in Spain as a resident and gets a rent from a house. I assume, he says, we will have to pay tax for that. But will I be able to deduct property taxes and insurance? Also, will I be able to use the full amount of the monthly rent for consideration of the financial requirement of the initial non-lucrative visa application and the renewal of a non-lucrative visa for the next year? Let me answer that. I mean, briefly. I mean, obviously, anything or any rent that you get from a house that you rent, obviously, you will be able to include and deduct cost of maintenance on that. Like say, insurance will be able to be included. Property taxes will be obviously will be entering some costs of any maintenance or depreciation of a property, which in the US, well, in Spain normally we include the building value, which is 3/4 in some ways. In the US, the latest declaration I've seen is like 50% land, 50% construction. So that construction area, you will be able to make a depreciation and include and increase the costs to decrease the base of tax. And the amount that you get from rents, not just also property rents, also for any of the income which is not guaranteed, like which is not pension, which is any other kind of like dividends or any kind, cannot be included, shouldn't be included as a non-lucrative visa savings, because it's just an income that is not guaranteed, it's not an income that will not be able to come for the following year. So if you are the perfect, but you have to show up that you have enough money savings in order to live in Spain with a non-working visa, with a non-lucrative visa, not just an application for the first year, also for the renewal for the following 2 years. Okay.
Pedro, I'll just like to just mention something. Having paid taxes in both the UK and resident tax in Spain, can I get a refund from the UK tax office? Yeah, the answer, you shouldn't be paying double. I did share with you, Russell, the dual taxation treaty. If you paid in Spain because you're liable to pay in Spain and you didn't comply with the FD9 form, which is a form that you will say that you're a tax resident in Spain and therefore that tax, you should get a rebate. You will need to fill in a lot of questions, answers of the questions, fiscal certificate, send it off to the Inland Revenue in the UK, and ask for a refund of that tax, okay? Because unless it's taxable only in the UK, okay, Russell? And
okay.
yeah, Pedro.
Last question, Ignacio. Yes, if you want to answer some question, the latest one.
Well, there are so many, Pedro, that I don't even have the time to run through everything.
Okay,
I don't know
Ignacio,
if Michael wants to say.
Let's say to the listeners who are listening to us, I mean, obviously, thank you everyone to making questions, writing questions. So we hope we have answered most of them. For those who we didn't answer, please send us an email, put your emails, Michael and Ignacio, in the chat, and we will be happy to receive your email, your mail, your questions, and we will contact you and we will try to answer those questions that we couldn't do it now. Thank you for your time. Thank you for listening to us. Thank you for joining us this webinar. And just as we say in the court hearings, Ignacio and Michael, last word, what would you like to say? Summarize.
Summarizing. Okay, well, doing tax planning is always a bonus. Don't forget to doing is always worth it. And always ask for independent advice. And it's always worth doing.
And thank you, Ignacio. And Michael, the last word, what will you summarize for this webinar?
Well, first, thank you for inviting me to the webinar. I think these things are great. And basically, I always just say people that in general, people that move over to Spain and they buy property in Spain, they just need to consult with a lawyer when they come over and do it in advance, even before they find the property that they're going to buy. Do a consultation with a lawyer that knows what they're doing. And you need to think about the various things. One is different regions of Spain have different levels of taxation. Ask them about it. Find out what the costs of buying a property in Spain are, taxes and fees. Ask them about your annual tax returns, both as resident and non-resident. Make sure that the immigration situation is sorted, that you're going to achieve what you want regarding staying in Spain, etc. And very important, ask about wills and inheritance, because there are certain decisions to be made right at the moment of purchase regarding in whose name you put the property, etc., etc. And as the average age of the people that buy in Spain is, average, I think the latest statistics say that the average age of buyers of property in Spain is like 62 or something like this. It's important to plan wills and inheritance into your purchase.
Thank you, Michael. Thank you, Ignacio. Thank you, everyone, for listening to us. I hope you enjoy. I hope you learn, and I hope we helped you in some way. But obviously, we have a lot of information on our websites, a lot of information on the webinars that we've done in the past, and we are happy to assist you and help you anytime. Have a nice day, and we'll see you in the following webinar, I suppose, in 2 weeks' time. Thank you.
Thank you.
Buying a property in Spain. There are many reasons to purchase a property in Spain. The climate, the food, the culture, or simply to enjoy life. If you already see yourself buying the house of your dreams in the Mediterranean, it is important to be cautious and follow a series of steps. First, prepare a budget and take into account all the possible expenses. Remember to add transfer tax or VAT to the sale price, as well as legal fees, notary fees, and land registry fees. And even if it was love at first sight, do not rush or sign anything. The most important thing, especially if you're not yet a Spanish resident, is to hire an independent lawyer, a specialist who speaks your language and solely defends your interests. Together, you can review the characteristics of the house, should it have pending charges, negotiate a mortgage with the banks, and you will always be up to date throughout the whole process. But most importantly, fall in love with your property and do things by the book. Your new life starts there. Pellicer and Heredia, international lawyers.